In a recent video, we looked at one of my favorite legacy brokerages, Fidelity, and in that video, I briefly touched on the many key differences between an old school brokerage account like Fidelity and a more modern, sleek platform like Robinhood. So today, let's do a proper comparison of these two platforms and also take a broader look at the industry differences between an old school brokerage account and a newer brokerage from your phone. All right, let's jump right into it. What is going on, everyone? I hope you are all having a fantastic day. So I'll say right out of the gate that Robinhood and Fidelity are both great platforms that in many ways have shaped the industry. I should also mention that I'm not being paid by either of these platforms, and I have used both of them myself for a very long time. So let's get into my fully impartial comparison of Fidelity and Robinhood. Obviously, Fidelity is what I would call the legacy brokerage in today's comparison, seeing that it was founded in 1946 and has changed significantly since then. Robinhood, on the other hand, was founded in 2013 and really pioneered the concept of commission-free trading, and is largely why platforms like Fidelity have since moved in that direction. Both platforms have a desktop and mobile-based usability. However, Robinhood is very clearly more mobile-focused and offers investors a sleek and simple way to invest right from their smartphone. In general, I would say that the Robinhood platform is much easier to use and again is going to provide that sleek and modern look that many other platforms have since copied. But more experienced investors and active traders could definitely argue that the Robinhood app is lacking in a number of analytical tools. While Fidelity does have a fantastic mobile application as well, they are definitely more desktop focused with a standard web platform, as well as their more robust Active Trader Pro platform, which is fully customizable, unlike anything that Robinhood has. So if you are brand new to investing and you're used to doing everything from your smartphone, then I would definitely check out Robinhood. But if you're looking for a more robust user experience, then you might want to lean towards Fidelity. But there are a lot of other variables that we have to talk about. Now, in terms of account options and types of investments, Fidelity definitely blows Robinhood out of the water. Beyond the standard brokerage and IRA account options, Fidelity also offers 401k rollovers, 529 college savings plans, youth accounts, custodial accounts, health savings accounts, trust and estate account options, and so many other specific account options that are simply not available on Robinhood. Additionally, Fidelity also allows you to invest in not only individual stocks, but also mutual funds, ETFs, index funds, bonds, single and multi-leg options contracts, Forex, fractional shares, and the list goes on. Now, Robinhood does offer many of those asset types, at least on the stock side of things, but the biggest differentiator is that Robinhood does not currently offer any kind of mutual funds. However, you can buy certain types of ETFs, but Robinhood does not currently offer any kind of bond investments or any kind of robo-advisor like Fidelity's Fidelity Go robo-advisor. That being said, while you now are able to invest in cryptocurrencies with Fidelity through very specific digital asset accounts, Robinhood obviously leans heavily on cryptocurrencies and allows you to actively buy and sell tons of different digital assets. So again, that one depends on what your investing strategy is, but if you are looking to actively buy and sell digital assets, then I would definitely go with Robinhood. So again, that category is really going to depend on what investment types you are interested in making, but in general, Fidelity definitely has more account options and more types of investments as well. Another big differentiator that isn't nearly as widely talked about is actually the execution strategy and the technology that each of these platforms is using. That probably sounds super boring, but Fidelity actually uses a proprietary routing system that is seeking the best available price on the market, with over 87% of orders seeing an improved share price. And that means that their average 1,000 share order saves nearly $20 per trade when compared to the quote of the original order. I know that that's getting really far into the weeds, but just for comparison, Robinhood doesn't even publish their trading statistics, and that is a large part of the reason why they have received so much negative publicity over the past several years, since many users wonder whether or not Robinhood is actually trying to get the best price possible. If you're buying and holding for several decades, then that probably doesn't matter at all, but if you are looking to actively trade certain assets, then this could make a huge difference. Now, like I mentioned earlier in the video, both both of these platforms are largely free across the board. However, there are some fees associated with certain trade types that you want to be aware of. Trading for stocks and ETFs are completely free for both platforms, and there's no account fees or minimum investment requirements or anything like that for either platform as well. You also have free domestic wire transfers. However, Robinhood does charge $75 if you want to transfer your entire investment account off of the platform, while Fidelity does not charge for that. Additionally, trading on margin, which I would never recommend, does require you to have the premium Robinhood Gold subscription, which is currently $5 per month, but anything beyond your first $1,000 of margin is going to be charged 3.5% interest. Fidelity's margin, on the other hand, is 9.075% for the first $10,000, and then 7.575% up to $100,000. Both of those are actually well below industry averages, but again, I would not ever recommend trading on margin because you are really taking a huge risk. So in my opinion, that one doesn't really matter. Now, when it comes to educational resources, both platforms are actually fairly comparable, with Robinhood offering their Snacks newsletter, podcasts, educational video series, a daily update on market conditions, and a lot of great tools to get started, especially for beginner investors. I think all of these are really important resources, especially for those new investors, but Fidelity offers a very robust learning center as well that includes articles, videos, webinars, and the ability to ask live questions to a real coach using their trading strategy desk feature. That being said, while the educational resources are similar, when it comes to analyzing your own portfolio, Robinhood does leave a lot to be desired. Beyond your real-time balances, your available margin, and your buying power, you really don't have much else in terms of information. Now, in fairness, there's only so much that you can display on a small smartphone screen, and seeing that Robinhood is a largely mobile-based platform, that is to be expected. But there are certain features like asset allocation breakdowns, your internal rate of return, and even a basic way to estimate tax implications if you decide to sell a certain investment that are simply not existent with Robinhood. Unsurprisingly, with a desktop-focused platform, Fidelity has a number of portfolio analysis tools that can help keep track of your portfolio and make sure it is staying on track, see unrealized and realized gains and losses, account balances, internal rate of return, and all of that information is displayed right to you in real time. Not everyone needs to know all of those numbers though, so again, depending on where you are at in your investing journey, that might actually be incredibly overwhelming, especially if you are just getting started. But if you're a little bit more proficient with your investing, or if you're actively trading, then having that information is almost a necessity. All right, here is a huge differentiator that is honestly the final nail in the coffin in my opinion, but that would be the massive difference in customer support. If you've seen any of the articles about Robinhood in the news over the past several years, then you probably know that their customer support is borderline non-existent. There's no telephone number that you can even call, and while you are able to submit your phone number for a callback and get support through the chatbot, I find it incredibly frustrating and difficult to use. And if you need help quickly and your money is on the line, then there is literally nothing more frustrating than not being able to talk to a real human quickly. And in my book, that's honestly a deal breaker. Compare that to Fidelity's 24/7 phone line support, as well as their many other FAQs, online chat support, virtual assistants, and clearly this category goes to Fidelity. I feel like it's fairly obvious where this one is headed at this point, but the last thing I feel is really important to talk about is account security. Nowadays, pretty much every platform is going to have those standard features like two-factor authentication and biometric recognition for your mobile platforms, but at the bare minimum, that is really what you would expect at this point. Robinhood does have the standard SIPC coverage up to $500,000, including $250,000 for cash claims, but they do not carry any kind of insurance beyond that for their members. If you have less than $500,000 in your account, then that really doesn't matter to you, but Fidelity does carry excess SIPC insurance all the way up to $1.9 million in uninvested cash limits, and according to Fidelity, that is the maximum that they are currently able to get within the industry. Robinhood has actually had a number of data breaches over the years, the most recent occurring just last year, and that impacted millions of customers, and that, coupled with the lacking ability to talk to a real person, is definitely a concern to me. We could honestly sit here and compare the fine details of these platforms to to each other for days, but I strongly believe that while the Robinhood platform does have a purpose for a lot of consumers and has helped move the industry in a totally new direction, it just leaves a lot to be desired as a long-term investing solution. Yes, Robinhood has an incredibly sleek and modern platform design, and yes, it has made investing accessible and affordable to the masses when just a few years ago that was not the case. However, when compared to one of these legacy brokerages, it just isn't even close. And if you're like me and you're looking to invest for decades and decades, then in my opinion, it is so important to go with a brokerage account that has that proven track record for the long term. I'm sure I'll get a lot of interesting comments for that opinion, but obviously today is just my opinion on this comparison. So I'd love to know what you think of these two platforms down in the comment section and which of them you feel is better and why. Be sure to check out some of my favorite financial tools using those links down below the like button. And as always, thank you so much for your time. I really do appreciate it so much. Take it easy, and I'll see you in the next one.